Good evening, everyone. Senthil here. Can everyone able to see my screen and hear my voice clearly? Thank you, Aditya. Thank you. So we got a question from Mr. Bajaj. So let me read it. 26th December 7:10 call has fell. Havels fell more than 2 INR 2. So did the stock. I'm still holding the things which you going through the material. Just a minute. Let me check. 7:10 call. 7:10 call. Okay, let me check. Okay, that's great, sir. That's great. So practice time, don't invest. So that's great. So let's see Havels first. So the date is on 26th December. 26th December. That is okay. 7:10 call. So you can tell. Just a minute. Let me open one more chart to open the option of Havels 7:10. So that option is expired. Okay, that option is expired, so we cannot able to check the old data which has been already scrapped from the trading terminal. And whatever sir you was telling is 7:10 call, right? 26th December in the sense, let me check the date. When is that? The day, let me check the day. When is that? 26th November or December? 26 December Havel 7:10 call has fell more than ₹2. So did check the stock. He was expecting reversal. Okay. December, great, great. Not on the basis of technicals, I can able to understand. 26th is here. See, first of all, there is no liquidity, right? Are we clear? 26th December, you can see there is no liquidity. So the first criteria itself is getting missed. So we have not started anything, Nikhil. Just Mr. Bajaj has a doubt, so we are clarifying on that. So the first thing itself is we are not supposed to trade in December. As the November call expires, people should start investing in December. So that will happen only from Monday. So everyone knows that weekend is a depreciation time for options. So liquidity will not come. So now you are seeing certain amount of liquidity here, right? Now you are seeing certain amount of liquidity here. So if you see Monday, still the liquidity will start increasing if the stock starts moving upside, or else there will not be any liquidity. Clear? So whoever knows option clearly, they will never carry forward the position on weekend unless it is going to give minimum 100% returns. Are we clear? Say for example, yeah, it seems cheap right now, correct? Say for example, I am buying an option at 10 rupees on Thursday. Unless I am expecting 20 rupees profit, I will not carry forward this option till next Monday. So our vision should be clear, our target should be clear, then only we have to start trading in option. That too, liquidity is very, very important factor. So now let's start today's subject, hedging or pair trading. It is not actually pair trading, it is hedging. The right term is hedging. So pair trading, why I want to tell us pair trading is just we should remember that we should buy or sell in the proportion. So that is the reason I am telling us a pair trading, or else it is a hedging. The right technical term is hedging. So let's start. Give me a moment. Now, okay. So hedging, you can see here, the right technical term is hedging, and you can't hear me. Just a minute. Let me keep my mic nearby. So is it audible now? Is it audible now? Bhaskar. Is it audible now? I think everything is working here, Pakka. Bhaskar, others, can you able to hear me? Is it audible? It's loud and clear. Okay, thanks, Nagraj. Simon, yes, thank you, everyone. So now the right technical term is hedging, and or in the other way we can tell as pair trading. So why it's a pair trading? Because when we buy, it's going to be a covered call. It's going to be a covered call. So when we buy a future, we will sell a put option. We will buy two lot opposite side option, and when we sell a future, we will buy two lot again opposite side option. So let's see what is that. You can see here it's a covered call number one, and stock should give movement either side 2 to 3%. Minimum stock should give a movement of either side 2 to 3%. These are the criteria. Let's see one by one. Okay, unless you don't expect this stock is going to give movement of more than 3%, or at least it should be 3%. On a minimal side it should be 2%. If it is going to give more than 3% and above, you can go for a hedging, or else no point of trading in hedging concept. Okay, this is very important factor. And the capital required in hedging is 2 lakh rupees, complete 2 lakh rupees required. You can't take an exposure. Hi Mayur, just now we have started the topic. The topic is hedging, or in other terms it's a pair trading. Can you repeat once, Bhaskar? You have to check your internet. So the things are going clear only for everyone. So please check your internet. So let me continue here. Stock should move either side 2 to 3%. The capital required is 2 lakh rupees to buy or sell one lot of futures and to buy two lot of options. We will not sell options, we will buy two lot of options. So what is this future and option? Here is the combination. If we buy one lot of future, quickly tell me what is the trend I am expecting. If I am buying one lot of future, quickly tell me what is the trend I am expecting. Yes, trend is up. Okay, one lot of future I am buying, and also I am buying two lot of put option. Now what is the trend I am expecting? Downside. That means I am ready, I am prepared for both the direction. Are we clear? I am prepared for both the direction. So either market moves up, I'll make profit, or market moves down, I'll make profit. If market is moving sideways, both the area, here also I'll make loss, here also I'll make loss. Are we clear? It is called as covered call. It is called as covered call. Even if the market is moving upside, I'll make profit in future, I'll make loss in option, because we have bought a future, and option we have bought a put option. And if market is moving downside, future will give me loss and option will give me profit. Overall it will end up with small profit or small loss. So that means if market, so everyone has a fear, right? What will happen tomorrow's market? What will happen tomorrow's market? If tomorrow market is 100 points negative, no need to worry. If 100 points positive, no need to worry. You can carry forward the future position peacefully. You can carry forward the future position peacefully. Are we clear? So let's understand very clearly. Let's understand this very clearly. And whoever is having a good capital, and want to make small profit, they always go by covered call. This is called as covered call. So let's summarize once again. Stock should move either upside 2% or more, and we can take like 3%, or downside 3%. It should give either upside 3% or downside 3% in 3 to 4 days. Again, the time, there is a time duration 3 to 4 days. Okay, and maybe ideal time frame is 3 days. Say for example, if you take a position at Monday morning, before Wednesday evening, the stock should either move 3% upside or 3% downside. Any side is fine. Next, the proportion of the capital required is 1.5 lakh rupees for futures, and 50,000 for options. And accuracy should be at least 60 to 80%. What is this accuracy? Now only you told that either it goes in upside I'll make profit, but it goes in downside I'll make profit. But since because of this, can we go blindly? We should not go blindly, right? So for example, I'll take Reliance. So I'll take Reliance. So if you take the stock, it is at the top. It is at the top. So now what is anticipated when the Reliance at this particular place? When Reliance is at this particular place, what is anticipated? Uptrend or downtrend? Since on top, yes, tell me, downtrend. So we can expect a downtrend. So still, but the stock is bullish, market is bullish. I don't want to take any risk. So what I'm going to do is I am going to take a hedging position. I am going to take a hedging position. That means I will sell future here. I will sell future here. I will buy 2 lot of call option. I will sell 1 lot future. 1 lot future. I'll buy 2 lot call option as a insurance. Now option is perfectly acting as an insurance. Am I right? So can we go through the examples? Live example we will go. Say like for example we sorted here. So we will see this live example now. So no chart, nothing. Opening of the market, assume that I am selling the stock. Again it should be clubbed with trade setup only. But just to give an example, just to make you understand what is a future trading, sorry, what is a hedging, I am going to, yes, we are going to do a back test. Okay. So let us read other points also. So stock should move either 2 to 3%. 2 lakh rupees should be the minimum capital. The proportion is 1,50,000 for future and 50,000 for option. I'll come to this later. Okay. So while giving an example, I will tell you why we require 50,000 for option. Accuracy should be 60 to 80%. Since we are going for a covered call, blindly we should not go and sell. Blindly we should not go and buy. So we should have a proper trade setup should be there. Next, this is to protect our capital. Profit will be less, loss also will be less. Choosing strike price is very, very important. See here, what I told you in a naked call, it should be ATM or 1 strike later or 2 strike later. But here it should be a ATM or ITM. Preferred is ATM. Liquidity is very, very important. Option liquidity is very, very important. So all other things we will see later. Now we are going just by one small analysis. I am selling this stock at 1565. Okay, I am selling this stock by 1565. Also I will keep a stop loss. Say like at this level. So 1575. I am taking a stop loss of 10 points. So is this digestible stop loss in Reliance for future? Yes or no? 10 points. My risk is 5,000 rupees maximum. When I go with the premium, it will be still less. My risk will be only 2,500. Okay. So we assume that we are closing only by day end. Since it's a covered call, no need to become panic. No need to your hands and legs. No need to get severe. So we can sit peacefully and we can trade. Since it's a covered call, nothing big will happen more than 5,000 rupees or 6,000 rupees loss. Okay. So let's see. So now I am going to sell 1 lot Reliance future. So I am not taking the future. I am just taking the cash market. Okay. I am just taking the cash market for an example. And if I am going to sell 1 lot Reliance future, what is the option I am supposed to buy? Buying, not selling. Okay. What is the option I am supposed to buy? Call option or put option? Put option. Perfect. Because in future I am bearish. So for protection, if stock goes against me, I need to have an insurance. So I am buying a call option. So which call option we have to buy in the sense? Since I am going sell at 1565, I can take 1560 put option. Clear? 1560 put option I can take. 1560 put option I can take. This premium should be less than 25,000 rupees. Ideal premium is in between 15 to 25,000 rupees. Don't take cheap insurance. It is not going to help you. Okay. So the premium should be, why should we buy call? That is what I am telling Sankeet. Have you attended the previous first 10 minutes? It is going to be a hedging. It's a covered call. It's a covered call. Okay. So if you are going for a short in future, you have to buy. Okay, it's a call option. We have to buy a call option, right? Have I told right? Sir, not put option, it's a call option. Okay, we have to buy a call option. Sorry, we have to buy a call option. I have added here correctly, but I told call put option. Okay. Okay, next. So we are buying somewhere around, let's say like 10 o'clock, we are going for a long, a short in future. So same time, let's see what was the premium here. 47 rupees. So 47 rupees, I feel the premium is little bit high. No need to buy exactly for 25,000 rupees. Okay, no need to buy exactly for 24,000 rupees. We can take insurance, so we can take a premium of 1580 call. That is acting as a first strike. So let's see both. Let's see both 1560. Let's see both. Okay, so now let's do a small homework here. Let's do a small activity here. I am buying one lot. I am buying one lot Reliance Future. Let's see both the way. Let's see both the way. Two lot option. Okay, I am selling here at 1565 and closing at 1548. So here I am making a profit of 8,500. So here I am going to buy two lot of option, which is 1560 put, 1560 call. Sorry, it's call option. That time the premium was 46 rupees and closing is 38 rupees. 46, 38, and here the lot size will become double. Okay, if you buy, instead of two lots, if you buy three lots, you will face loss. Instead of two lots, if you buy one lot, you will face loss. It is a proportion. How much salt you have to put in the gravy or food, only that much we have to put. If it is not there also, we can't eat. If it is excess also, we can't eat. So this premium is like salt. Okay, so now let's see what is the 1:2 proportion, right? So loss here is clear. So 9 points loss, 9 into, you can see here. So it's negative 9 points. So we are making here loss of 500 rupees if we might have taken in the money. Why this is not worked today? Because the premium is very high and the option depreciation will be very high. Okay, the ideal time to trade this concept is from the first week Monday. So when the Monday is starting, that is from the first week Monday, you can trade for 3 weeks. 1, 2, 3. So these 3 weeks are the ideal time. Last week it is not the ideal time again. The insurance will not work. Again, it will not work on Friday. So let's see that. Same thing if you might have taken 1580 call. 1580 call. Excuse me. 37.29. Again you can see there is a small profit. There is a very small profit because both the side option depreciation is very high. The depreciation of the option is very high, so that is the reason this has not given profit. So let's see we are buying Reliance future here 1565. So now it is, as per today's market, it's a wrong direction, right? We have did the wrong direction. 500 1548. So close is somewhere around this. Again, minus 17 points is the loss, 8500. So if I'm going to sell on future, if I'm going to buy a future, so what option I should buy here? If I'm going to buy a future, I'm going to buy stop. There is no stop loss for option. When the stop loss hits in future, you have to exit. So we should buy put option, right? We should buy put option. Perfect. So buy a put option, Reliance put. So which put we can take? We can take 1560 put. So which becomes at the money, which becomes marginally at the money. 32, 38, 32, 38. You can see we have got profit of 6,000 rupees. So let me see, 32, yes, 38, yes. You can see here both the places it has not given big profit and big loss. We have to keep stop loss. Yes, we also have to keep stop loss. We should not wait completely. If I take OTM, the insurance will not get covered. If you take OTM, first strike is fine. If you take second strike or third strike, the insurance will not cover. Say like for example, your family is having 5 members, but you are taking a health insurance of 1 lakh rupees, a group policy of group insurance of 1 lakh rupees. Do you think that will be sufficient? Husband, wife, 2 children, or say like husband, wife, 1 kid, and parents. So do you think if you take an insurance of 1 lakh rupees, do you think will it be sufficient? It will not be sufficient. So that is the proportion of the premium quantity. That is 2 lots we have to take option. Number one. Number two, take an option either in ATM or ITM. Clear? So when you trade like this, there is no possibility of making big losses. Your loss will not exceed more than 10,000 rupees for sure if you are having liquidity in option. If you take coal call option, do you think will it work? Let's see. So 1474, assume that you are taking 1500 call. So do you think this option is going to help you? Can you see the liquidity here? So can we take like this? So this is also not going to help us. So which stock initially can I take? So I have added here a list of stocks. So these all stocks will work in options and futures. So you can say like this is my trading list: Asian Paints, Aro Pharma, Axis Bank, Bajaj Finance, Bank Nifty, Bata India. So these all things will work in future and also in options. However, you have to see the liquidity time to time. Since I told don't go and buy this blindly, you also have to see the liquidity on time to time. Is there any other way to check the liquidity other than 5 minutes option chart? No other option, no other way. One day the option liquidity will be 5610105. So next day liquidity will be some even and odd numbers. How will you check? All 150 companies will have good liquidity. Anand sir, that is the reason I told you this list is having only 50-60 companies. Clear? Out of that 150, I have filtered 50-60 companies, and this is going to work in future and option, but there is a condition. Check the liquidity then and there. I have reduced your work from 150 to 50. From 50, when you start before taking the position, please check the liquidity. Is that clear? So now I'm repeating this again. So did we understood this concept? Who didn't understand this? I have few more things to explain. Why future and option? Why option and option? Option and option is called as straddles. So that I'll explain you later. Should we check an open interest also? Yes, sir. What do you mean by open interest? What is the purpose of checking open interest in future? Again, tell me the right term. Tell me the right term. Volume. One more thing. The right term. Momentum. Perfect. Why do we check open interest in future? To check the momentum. That means, is there a force to take the stock up in next 2 or 3 days? Purpose of hedging is, you can see here, you lost here 8,000 rupees, you lost here 8,500 in future. If you might have only taken the future, you might have lost 8,500. Since you have taken a put option, it has given a profit of 6,000 rupees and your overall margin is only less. Overall loss is only less. So this is the purpose of hedging. Next is, no need to fear about the carry forward of the trade. No need to fear about the carry forward of the trade. I did not, but I will see the video and come back. Okay, thank you, sir. Both buy and sell in future option need to be taken in hedging. Yes, you can do both. You can do for buying also, you can take option in hedging. For sell also, you can take option in hedging. So someone asked, what is the why we cannot buy and sell future and future? Say, like for example, you are selling future at 1500, you are buying future at 1500. If it is moving up 50 points, what will happen? 1500 you bought here. So do you think, is there any profit or loss? Is there any profit or loss? No profit, no loss. The marginal profit will be there. Marginal 2,000 rupees, 1,000, even 1,000 rupees profit, 1,000 rupees loss will be there. That is nonsense. But if you do this, and hold for 3 days, okay, whichever side. So here, how many points, how many percentage it has made a movement? Can someone tell me? From 1565 to 1549, how many percent it has given a movement? Quick. From 1565 to 1550, 1549, what is the percentage of movement? 1%. If it is moving, it's not 1.4. 1.4 means it should have given 20 points. It's 1% exactly. So if it is, say, like for example, Monday, Tuesday market, if it is coming another 2-3% down, both the trades will come in profit. Let's keep this in track. Let's check in the next 2-3 days. Both the trades will come in profits. Are we clear? So next, let me summarize one more time. Stocks should move either 2 to 3%. I am hedging in only call and put can be taken together. Madam, that is different strategy. That is called as straddles. I'll explain you. That is in the upcoming curriculum. If the trend is up, I am buying 1 lot future and 2 lot put option. But in the same condition, I am selling future and buying 2 lot call option. It will work. Yes, sir, it will work. Why this hedging concept? Because even if your trade goes wrong, okay, you are expecting trade from bottom, but the stock didn't reverse. Further, it is crashing down. Even that time also, this will safeguard us. Are we clear? What is the percentage of return if you meet the target? Maybe you can expect limited profit only, sir. You can make say, like in between 5 to 12,000 rupees will be the maximum profit. It will not be more than that. It will be in between 5 to 12,000 rupees. It will not be more than that. Because one side, when future gives profit, the other side the option is giving loss, right? One side when the future gives profit, the other side option is giving loss. One side when the option gives loss, other side future will give profit. Okay, so this is for safe trading. I'll summarize again. Stock should move either 2 to 3%. Let's keep it like 3% and above. Okay, if you anticipate the stock is going to give more than 3%, you can take this. Bouncer, for the point where you mentioned that position will reverse. Yes, sir. Many of us tell me to hedging. Okay, events time you can hedge. Yes, perfect. In the events time you can hedge. If you want to trade, you can hedge. So capital should be 2 lakh rupees, and 1,50,000 is for futures and 50,000 for option. Accuracy should be 60 to 80%. This is to protect our capital. Profit will be less, loss will be less. Choosing strike price is very, very important. It should be in ITM and ITM or ATM. Liquidity we have to check, spread we have to check. Do analysis one day before execution. Hold your questions. See, don't start this activity suddenly in the market hours. Do your analysis one day before execution. Okay, and you can execute by morning 9:30 itself. You can execute by morning 9:30 itself, because we are going on a hedged mode. We are going on a covered call. Okay. Yes, our main profit is only on future. Option is for safety. In case if that is not happening, also option will give us profit. Yes, every hedging capital should be around 2 lakh rupees. Don't keep less capital and do hedging. The position will be closed. Next, buying action. Action in the sense, buying future and buying option should be done within 1 minute. After buying future, you should not sit and think that can we buy option or can we buy option after some time. So we should not think that. Closing also should be done within 1 minute. Perfect time to trade is first 3 weeks. Avoid this method in 4th week, because option depreciation will be rapid in the 4th week. Option should be at the money or in the money. Same thing here. Buying and closing should be done within 1 minute. Closing also should be done within 1 minute. After buying a future, don't sit and think, should I buy an option or not? We should not think. You can see here, action again here is, if you buy 1 lot future, you have to buy 2 lot put option. If you sell 1 lot future, you have to buy 2 lot call option. Only buying. If you buy future, don't go and sell the call option or put option. We are going to buy call option or put option. Okay, a little bit confusing only, but if you start practicing on liquidity stocks, which is like Reliance, Infi, TCS, IndusInd Bank, HDFC Bank. Start practicing like this kind of stocks, and then move on to little bit liquidity stock, less liquidity stocks. And this can be done in Nifty also, but again you have to expect a very big movement in Nifty, or else it is not going to help you out. So any doubts? From my part, I have told everything. Any questions? Hedging can be done with a good capital. Good capital in the sense, again, it's like 2 lakh rupees is required. And weekly, you can expect minimum 5,000 rupees as a profit and 15,000 for a month. Again, it's like 7.5% returns. The minimum the profit you expect, your trading career will be very, 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 very peaceful, sir. Who didn't understand the last sentence I told you? The minimum the profit you expect, your trading career will be very, 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 very peaceful. It will be consistent. You will not have any kind of pain. So you can trade peacefully. What could be the maximum holding period? 3 to 4 days, sir. Don't carry forward again on weekend. Again, don't carry forward on weekend. Intraday and 100 SMA class not complete. That will come, sir. Tomorrow, Monday, we will start. We have still one more week to complete. So we should not hedge on Friday. Absolutely wrong time, sir. Don't start your hedging on Friday. Absolutely wrong time. Friday you should close the position. How much maximum loss? Maximum worst case loss can be 10,000 rupees, sir. If option some adjustment option, some adjustment happen in option, all those things also, the maximum loss could be less than 10,000 rupees. What should be the expectation of profit every month? Sir, it can be in between 7 to 10%, sir. A decent profit of 7 to 10% you can do from cash market, future, delivery, whatever it may be. You can do you can, the less number of profit you expect, the trading career will be very good. So I need just a half a minute break. You can type here any questions. Just I'm reading only. I just want to send a small text message. You can ask your questions. Okay, I'm done. So Friday selling option. Selling option you can do. Yes, I told you, right? Friday you can sell an option. And anyone want to any one future and option stop loss hit? There is no stop loss in option. There is a stop loss only based on future. There is a stop loss only based on future. So again, this is a wrong question. How do we keep a stop loss? Do we keep a stop loss in future or option or cash? Which is the right term? Deepak, where we should keep the stop loss? Cash market. Perfect. Once the cash is the master of everything, once your cash stop loss is hit, exit future, exit option. So by the time you'll be having very less loss. Just a minute. I have observed that from Saturday to Tuesday, if both call and put Nifty of third strike away, we can make a good profit. Yes, you can do. Even third strike is little bit danger. You can take fourth strike. In terms of 100, you can take third strike. Perfect. This is for hedging in vanilla option. Say ABC, as per our trade setup, technical parameter we found for long, calculated entry price is 100. My question is, which option I have to buy? Target 110, 120, 130. You have to buy 100 call or 102.5 call. That is what I told you. If we are going to make a long in Reliance at 1565, either we should buy put option 1560 put or 1580 put in the money. 1580 will be too costly. You can take 1580 put. If you are going for a short at 1565, okay, you can take 1580 put, sorry, 1580 call or 1560 call. 7 to 10% per month, it is possible. Yes, sir, very much possible. Very much possible because your position is secured. Remember this, your position is secured. Is this equally applies to Bank Nifty? Bank Nifty, it will not work, sir, because the volatility of the Bank Nifty is very high. Maybe you have to practice and you can implement Bank Nifty, because again Bank Nifty has a weekly expiry, right? So if you take the wrong proportion, money will dissolve in no time. This will work in Nifty. This will, even Nifty is very rare case. You can take uh, stocks will be the better idea, sir. So option shall be selected in opposite direction as for the future. Perfect, sir. That is the right term. What about index? Sir, that is what I told you. Nifty, Bank Nifty is called as index. Don't try this in Bank Nifty. Try in Nifty with limited risk. Bank Nifty, your money will dissolve in no time because option liquidity, or how to say that, option depreciation capacity is very high. Clear? Okay, we'll start next. Sideways market, you will have minimum loss 2-3,000 rupees. Maximum loss will be 2-3,000 rupees. Okay, so we'll start the next topic. So how to trade with this how to trade with this trade setup is, you can take double bottom, double top, and the reversal patterns, trade from top, trade from bottom. So these are the places you can make your entry. Say like double top, even if you don't have a candlestick pattern, but still you can able to enter. Now tell me, in Reliance, do we have a candlestick pattern? Is this proper hammer? Sorry, is this proper hanging man? No, right? Yes or no? Is this proper hanging man? No. Still we can make our entry because we are covered. Do this trading on Monday, not today, because weekend again depreciation will be there. We can tell us bearish engulfing. No, sir. Bearish engulfing cannot be told because the body should be little bit big. If the body is like this, we can tell us bearish engulfing. Now it is like no pattern. We can say like no, there is no pattern. Ideally, there is no pattern. Let me check. Ideally, there is no pattern. Bearish engulfing in the sense the body should be, the previous candle body should be solid. Here more than 50% there is a shadow is there, wick or shadow is there. So we'll start the next topic, straddles. Okay, straddles. Whoever asked, can I buy and sell option? Can I sell and sell option? Yes, that is called as straddles. So straddles can be done only in option. If you take a combo of future and option, that is called as hedging. You buy future, you sell, you buy future and you buy option, that is hedging. You sell future and you buy option, that is hedging. And straddles, there are many straddles that everything cannot be covered. I'm covering two simple straddles, which is called as long straddle, short straddle. So this straddles can be done only in options. And we'll start. So now long straddle. Long straddle in the sense, there are two straddles, two types of straddles. One is long straddle, second one is short straddle. So long straddle in the sense, buy one lot call option, buy one lot put option at the same time. Execution should be done immediately. Choose the strike price before buying. Premium should be plus or minus equal to both the option. For example, let's take this Reliance itself. So buying call option, buying put option together. So now we know that this on a daily chart, this Reliance is on top. On a daily chart, this Reliance is on top. So I'm expecting 50 points downtrend, 50 points or 75 points downtrend in the next 2 to 3 days. Again, weekend, it is not to be done in weekend. Long straddle is not supposed to be done in weekend. Weekend is a negative point for this. Whenever we buy an option, weekend is enemy. Whenever we sell an option, weekend and public holiday is a friend. Okay, so coming back, so assume that this point from here 1581, I am expecting Reliance to reach 1500. That means 80 points, 5 to 6% I am expecting a reversal. Only in that kind of places we have to use this long straddle. Again, 3 to 4% expectation is required. You can see here, either side good movement should happen at least 3 to 5%. If the stock is going to move sideways, both option will become zero. It is high risk trade. Unless you are sure about movement in the stock, don't trade in this pattern. Okay, trade from bottom, trade from resistance, result based or news based. Ideally we are not supposed to do so, but still if someone wants to invest a small amount, we can try. We'll work on high liquidity stocks. Again, I'll keep like, no, don't try. Let's, our policy itself is very clear. Let's not lose even a single rupee just by trying our luck on stock market. Okay, so but still, why it is used? So the concept or the reason I'm writing here. Okay, will work, liquidity will work only in high liquidity stocks, that is our stocks or index. Next, strong news. Again, I am writing, I'm making a I am making a red line here, red mark here. Strong news. but still let's not enter into this kind of knowingly, let's not put our legs in the trap. So maximum holding period is 3 days if it is in cost or in profit. So let's see an example. Let's see an example. So whatever the premium we buy is called as outflow of the money, because we are buying both the sides. So when the stock is at 1580, I am buying 15, but if there is strong news, then premium is very high for both sides. Yes, that's right. If there is a strong news, instead of the premium being 10 rupees, it will be 15 rupees. So let's not try. No. 1620 call and 1560 put, 156080 put. No, 1560 put. So let me check both. What was the initial price? So when we start our day, when we take the position, both the sides premium should be approximately equal. Approximately equal. So you can see here 32 rupees. One is 32 rupees at the beginning of the day, and other one is so both I have taken put. That is nonsense. Call 1640 call. 16 rupees. No. So one more thing, we should not take premium more than, we should not 1600 call and 1560 put, 1540 put, 28 24. So there is difference. So just let me make a center point. 1580 today morning. I am taking 1620. You can take in second strike, first strike or second strike. At the money premium will be little bit high. Since we are buying both the sides, at the money premium will be high. So you can buy first strike or second strike. 1620, that means two strike, right? So here two strike, 1540. So have I taken right? 28 24. Let me try 1620. 1620 is here. Okay. See, put premium was costly. 21, 28, 24. So we can take these two. Okay. We can take approximately these two. That is, we are taking the center point. The center point in Reliance morning was 1580. Since it was 1580, I am taking 1620. That is second strike and call and put. Again second strike on the downside. Okay, so the market price of the premium morning was 22 rupees and 21 rupees, and this is 24 rupees. So call option 22 24. So this is called as, we are spending 46 rupees. This is called as outflow of money. This is called as outflow of money. Here also we need to keep stop loss. This is very important. Here also we need to keep stop loss. The default stop loss will be 25% of the premium. So how much is the total premium we are investing into? 500. The invested premium is 23,000, which is called as outflow of the money. Okay, and stop loss, how much it is going to be? By 100 into 75. So when you make a loss of 5,750 rupees, you have to close your position. So the maximum risk here is 5,750. If market is not moving and if it is moving sideways, then you may face loss. If the market is moving sideways, you may face loss. Any doubts? Okay, so let's see what happened at the end of the day. 28 and 16. So call is now 16.75 and put is at 28.5. So 45. So as of now, the premium is in cost. So again, if this is going to give 2 to 3% and above movement, you will be making profit. Who didn't understand this? A very simple thing. Don't trade unnecessarily by taking call option and put option. I am sure that we may lose money. Am I audible? There is no response from anyone, so that's the reason I'm asking you. Okay. See, unless we are sure about the trend, this stock is going to give 3% movement in the next 5 days. Sorry, next 3 days, not even 5 days. 3 days, because we are going to buy an option, right? It's going to be a vanilla option. So buy, we are going to buy only options. So we are not going to sell. So don't trade unless there is any need. 3% of stock or options. Sir, I'm telling stock should give movement, sir. If option is giving 2%, what is the purpose? Out of 27, 2% in option, how much, sir? 20 paisa, 40 paisa. Do you trade for, will you invest 23,000 rupees for a 40 paisa profit? Minimum amount investment, something around 20,000, 25,000 will be required. 25,000 rupees will be required. Because we are buying both the side option, right? Got it or not? Let us see some example. Did any stock performed today? Say like for example, anything has given was 20 today. Market was Dish TV 15%, iBull 13%, iBull Finance 13%. So let's see the stock. Just hold on, just hold on, just hold on, just hold on. Let's see the stock. You can see here 360, 370. Today opening was 370. Okay, today opening was 370. Let me take 390, 400 call and 330 put. 400 call and 330 put. Let's take in the beginning itself 31 rupees. 31 rupees into 800. Is it feasible amount? 36 rupees. 31 into 800, how much it's coming? Very costly. So let's take 5 strikes later. Just for an example, to make you understand. So which kind of places it will give big profit. Okay. 30 rupees. Again, it's 30 rupees. Have we changed? 30 rupees. What happens? What type trade is this? Hedge. This is called as long straddles. 25. All the options are very costly. All the options are very costly. See, 450, there is no strike price at all. 420. Again 30 rupees. I don't understand. So there is some problem. It said the stock was very volatile. Okay, stock was very volatile. So this kind of movement there is a big possibilities of making good profit. But the thing is like, don't take the premium more than 25,000 rupees. But what will become more than 10% from the strike price? We can't expect much movement in a single day. This happens, other thing, no, it will get a good movement if we are entering this kind of trades. If you could able to identify a stock like this, and if you could able to make your entry in the morning itself, there is nothing better like this, sir. The only thing is we require which stock is going to give you big movement. Nothing else was in zeal. Okay, let's take zeal. Movement both the ways will give profit. Only movement is expected, direction with results. Ma'am, I don't understand your question, ma'am. See, the thing is like, which side stock is moving, that side we will get profit. The other side we will get loss, right? So Z, you know that Zeal, everyone knows that, that is in problem for the last 2 days. There is some news in the last 2 days. Assume that at 315, say like this place 320, we are buying 350 call and 290 put. 350 call I told, right? 12 rupees, still it is costly only. We should not go for a fourth, fifth strike. It will not going to work. See here, 9 rupees and 12 rupees put together. Outflow is 20 rupees and uh, outflow is 20 rupees and inflow is 31 rupees. Outflow is 20 rupees, inflow is 31 rupees. So we are making 11 rupees profit. Match strike prices should be on premium. When buying options, how to decide the strike price? Strike price should be, it should be less than 1 or 2 strike price. Number one, the condition is it should be less than 1 or 2 strike price. The second condition is premium should be less than 25,000 rupees. Are we clear? Stop loss will hit. Stop loss will hit. Obviously, stop loss will hit. If both market is sideways, stop loss will hit. Trend goes up, call will give profit, put will give loss. Any other doubt? Bouncer in the sense I didn't understand, sir. What is bouncer? If you are expecting more big movement in the stock, you can make it. Sir, when we buy both the side, okay, when we buy both the side, assume that call is giving profit, call will move like this and put will move like this. So this is how we make profit and loss. Call is moving 13 rupees, put is moving, say like for example, call you bought at 5, put you bought at 5. Call is going to 13 rupees, put is going to how much? Maximum how much put can become? Maximum how much put can become? Okay, let's take us 0. Now it is profit or loss. Okay, let me explain you another way. Just a minute. We are buying an option at call option, we are buying at 10 rupees and put option we are buying at 10 rupees. Okay, assume that stock is going upside non-stop 3 days. 3 days stock is going upside non-stop. Stock has gone to 30 rupees. That is call option has gone to 30 rupees. Put option, what will be the maximum risk? How much it can go negative? 0. Okay, ideally it will not become 0, it will be 0.5 it will be in worst case scenario. So now is it in profit or loss? 30, our investment is 20. Okay, now it is 30, it is in profit. How much? 10 points profit. If it is going to 50, how much profit? 30 points profit. Your investment is 20, you are making 30 points profit, because one side the maximum risk is it can become only 0. Are we clear? If it goes only 17 and reverse, sir, you have to book profit, sir. We know what is trailing stop loss, right? We know what is trailing stop loss, right? So we have to see, when you are going to buy a call option, when you are going to uh, enter into a this kind of long straddle, you have to put Excel like this. I bought call for 22, put for 24, total outflow is 46. Now it is 28, put is 20. So now I am getting 2 rupees profit. So I'm getting 2 rupees profit. Put is going to 32 and it is 19. I am making 5 rupees profit. It is gone to 40. It has come to 10. I am making 4 rupees profit. So like this, you have to keep a Excel. Small Excel or a small write-up you have to keep and manage the positions. When market is in sideways and premium depreciates, you have to book your loss. So can we move to the next topic? So trade very carefully. That is very important. What is the ideal time for this? Sir, again I told you, right, when we buy an option, either it may be in straddles or in hedging, when we go for an option buying, the right time is not to hold on weekend. So maximum 3 days. Maximum 3 days. So 25% of stop loss, which option we have to consider? Put together 25, sir. I have mentioned here clearly. You can see here, outflow is 45. On the outflow, the stop loss is 34. Clear? Can we move to the next topic? I mean, first week of the month, last week of the month. First week is the wrong time. You can trade 2, 3, 4. First week is not the right time to trade. We can add this also. Avoid trading in. See, it's there. Avoid trading in first week. You don't miss any points. See here, same thing. Premium should not exceed more than 25,000. So please go through this Excel. This is very important. So make your understanding, make your notes in the way such like you can able to understand yourself. So can we go to the next straddles? Next straddles, next type. Is it confusing? Actually, so far it was very clear. Once we start the intraday only, you'll start feeling confusing, because it will be like you may feel next week you'll feel like little bit overloaded. But that is the reason we are downloading the course little by little. And after this, you have to sum up. You have to segregate. You have to do your client profiling. We will do everything later. Okay. So should we avoid hedging and straddles in the first week of the month? Long straddles should be avoided in the first week. Short straddles can be done in the first week. Long straddles can be avoided in the first week. Short straddles can be done in the first week. So coming back, the second type, which is called a short straddle. Short straddle. That is nothing but option writing. You require 1 to 2 lakhs capital is required depending upon the stock future. the stock future span margin is required, and uh, and the logic is like, we have to sell one call option and sell one put option in the same script. We have to sell one call option and sell one put option in the same script. So let's read the logics again. Capital required is 1 to 2 lakhs. Monthly 1 to 2 trades is sufficient. Monthly 1 to 2 trades is sufficient. This is very good for passive trader or a full-time employer or a business person. This is very good. One full span margin is enough to trade in 2 lot of opposite side option. One full span margin is enough to trade with 2 lot of opposite side option. Stock should not give big movement. That is the very important condition. Don't go and pick the stock which is like HDFC, Reliance, bullish stocks. Don't pick. Don't touch the furious stocks. Clear? So choose the option in OTM only, fourth strike and above. Very, very important. We have to pick the stock which is like lazy stock, number one, and number two, we have to pick in the fourth strike. Fourth or fifth strike we have to pick. This trade should happen at the beginning of the contract. This trade should happen at the beginning of the contract. Don't go and write the option at the last week. You will be getting only peanuts. Okay, so let's see some example. We have seen option writing, but let's see on the both the sides. Say like for example, if your capital is 10 lakh rupees, you can make 8 to 10% in single trade in a month. And negative side, there is a possibility of making again 5 to 10%. That's all, not more than that. And so can we see an example? So can someone tell me any stocks, like very dull stocks? So Pro Financial Capital, I have not heard. What is that? Pro Financial Capital. ITC we can take Kajaria. SBIN we can't take, sir. When there is a news in SBIN, we'll get screwed up. Don't take banking stocks. Banking stocks. See, if you take SBIN, okay, let's see. SBIN is not the right stock. TCS, Infosys, Prasad, that is a very wrong stock. I have taken. Fine, stocks is sufficient, I believe. So let's see some examples. Okay, let's see some examples. Again, go by daily trade setup. Everything we have to follow trade setup, sir. Everything go and follow trade setup. So now you can see SBIN. This is the place we can sell one side option. Okay, if you sell here one side option, that's fine. But from 350, if you sell 390 call, that will be good. Say for example, let's see SBIN 390 call, how much it was? It was 2 rupee 37 38 paisa. 390 is very far, I think. Let's take 380 call. 3 rupee 46 paisa. 3 into 3, 9,000 is sufficient for one single trade. Are we happy with that? Do you think SBIN will reach 390 by this contract? We have to think logically. Do you think SBIN will reach 390 by this contract? 390 is very far here. Not at all possible, right? Not at all possible, because that is going to be lifetime high. Am I right or not? Everyone, 390, this stock has never gone to 390 or 380. See here. See the daily chart. The best friend for option writing is a daily chart. Don't go by any intermediate time frame. 390, 380, it has never gone. So if you might have sold that today at 3 rupees, approximately at 3 rupees, this will become zero in third week or third week maximum. This will become zero. So do you think for a capital of 1 lakh rupees for a single trade 9,000 rupees is good or not? Yes. Next. Now on the other side, if possible, we will sell the put option also. So now 350, from 350, do you think this will reach 310? Is there a possibilities? Answers, come on here, let's be interactive, please. Yes, possible. There is possible. How it has gone back? See, now it's very simple, sir. Mark our target. So this will reach 300, should be better, right? We should take 300 put. We should take 300 put. If you are going to write, you can take 300 put, so that it's a daily chart, right? If you might have sold yesterday, if you might have sold 1 rupee 40, 1 rupee 50 paisa. Okay, let's do a small calculation here. 3 rupees and 1.5, lot size is 3000. So 13,500 rupees, is it good enough with 1.5 lakh capital? Single trade. Are we clear how to select the options? The place which you think it is not going to reach before the expiry. Again, if something goes wrong, we can close the position. We can exit in stop loss. No worries. In how many days is the question? Till this contract, till the contract ends, sir. Next 30 days, next 20 trading days, this stock should not reach this levels. Just a minute, I'll show you. It's not reach here and it's not reach here. So do you think this stock is going to come all the way here? Even if it is coming here, fine, it's not close below this. It's not close below this. Even if it is going till here, that's fine. It's not close above this. If it is coming here and if it is bouncing back, again the premium will become zero. If it is going here and again coming back, the premium will become zero. So our target is to take the complete premium. Okay, next let's see Coal India. See, now it is in now see the curve theory. It's in top, bottom, middle. See the curve theory. Where is the stock? Top or bottom or middle? Middle. So it is the right stock to pick for this current trend. Okay. Coal India, we can take 220 call and we can take 180 put. 180 put is very cheap. We can take 190 put. So we can take 190 put. Yes, that's right. So how much is 2 rupees? 1.8. So lot size is 2,200. So if we sell this, we will get 8,700 rupees as a profit. Clear? Same. This is for Coal India. The same like that ITC. Don't take very furious stock. So ITC, now you can see here ITC in a very bearish mode. So now we can say like ITC will not cross below 230, we can consider, but there is a higher chance of reversal. Higher chances of reversal. Okay, higher chances of reversal. So what we can take is ITC, we can take 220 put, 220 put we can write, that is very less, 210. So premium is very cheap. So let's not go in this stock. This stock is not working now. So Wipro, let's see Wipro. So Wipro, tell me it's in the top of the curve or bottom of the curve? Bottom. So now writing a put option is fine, but writing a call option is a little bit risky, right? Selling a put option is okay, but selling a call option is little bit risky, because if the stock is getting reversed, then we should take a place where it is not going to reach. Again, see the next strike prices. Let's see what is the strike denomination. Okay, it comes like this, no, Wipro. So we can take 230, 220, 225 put we can take. 1 rupee 35 paisa, and call we can take 240 call, 250 call. So again 9,000 rupees. Is that sufficient? Do you think is that sufficient, 9,000 rupees? If you feel 9,000 rupees is sufficient, yes, we can write both the side, or else you can ignore. What I feel is at least you should get some 10,000 rupees premium when you write both the side. So you should pick the stock like that. And take one more stock, TVS Motor. So it's in pakka middle of the curve. We can write 520 call, 510 call, and we can write 440 put. Monthly range is not required. Monthly range is not required. So let's see monthly range. Monthly chart will be very difficult to identify, sir. Now you can see here very clearly. We can write 520 call. And put we can take 440 put. 430 put also we can take. Pakka, this is sufficient. 10,000 rupees. Selling call option and put option. Writing in the sense selling call option. This strategy is selling call option and selling put option. Yes, Ambuja Cement we can take. Ambuja Cement. If you are having capital, your trade is ready. Again, perfect stock. You can write 220 call and 190 put. Again, say like 7,500 rupees. We can take 190 put. We can take 195 put in this. Yeah, we can take 195 put. So we can do like this. In any stock, we can do long as well as short put together. The stock should be lazy stock. It should be in a sleeping mode. So now did you got the right term? The stock should be in sleeping mode. We can take BPCL. Let's see BPCL, because BPCL we can't take because it's in sideways movement. But where is the BPCL? It's in top of the curve. Maybe if you see like that, now it is in it's giving irregular movement. Divi slab, no sir. Divi slab absolutely no, because it's a trending stock. Divi slab is a trending stock. Cumis India option liquidity will not be there, sir. Completely option liquidity will not be there. Again, Coalpal option liquidity will not be there. We require liquidity, right? Titan, absolutely no. That is a very bad idea. Titan, choosing Titan is a very bad idea. Okay. So now let me summarize the difference between Tata Steel, again a very bad idea, sir. Tata Steel, it's a very bad idea. Liquidity in option is very good, and McDowell is a bad idea. KMCH, I don't know that stock, sir. Maybe it might have came now. KMCH, is there any stock? What is that stock, sir? Kovai. That is not in Titan, Prashad. I told Titan. It'll give a very bullish and bearish movement, sir. Titan. We should not take a trending stock. See here, Titan now it is dead, but once it starts moving, see this previous movements here, sir. It will move wild. Cardiac. I think. Anand sir, this I don't know what stocks you are telling that the stocks should be working in super sales India. I don't understand. So these are I don't hear I have not heard about the stocks. So only the stocks which is in cash market, sorry, future market only it will be work. Okay. So let me summarize. Long straddle premium is enough to buy, and both options call and put we will buy. Market should give big movement one side. Profit is based on the movement, and limited risk. Limited risk premium will be zero, will become zero. And short straddle span margin is required. Both option call and put we will short. Sideways moment is expected. Profit is premium. Unlimited risk. How can I take screener for this type of strategy? Okay. So I have doubt on selling future and one lot selling option, one lot put option. No, that is absolutely wrong. Why do you do this, Bhaskar? I am telling this is the proportion. Why do you want to do the other way? This is the proportion. You can change in 100 ways. When I tell a proportion, you can change in 100 ways, but everything will become wrong only. See, that is what I told you. Derivatives in the sense already it has been derived and we have to follow in the same way. Maybe you can try doing invention or discovering something on your own way, but do only on paper trading. Why we need liquidity in short trading? You need buyers, right? You are going to short. At the end of the contract, you need buyers, right? You short at 8 rupees. Next, the buyer is at 16 rupees at the end of the contract. What you will do? Fine. So you can start practicing. We had enough good amount of knowledge this week. So you can start practicing. You can start practicing during this weekend, tomorrow and tomorrow and day after tomorrow. Okay. So you can we will Monday evening clarification session we can discuss. Clear. So thank you. Happy weekend. Gopi, cash hedging can be done in cash and options. Yes, we can do. But you should see the proportion. You don't give any call in SP channel. Hedging is a big capital required, sir. Tomorrow there is no class, sir. Tomorrow there is no class. Okay. So thank you. Happy weekend. So we'll see you on Monday evening.